Now, in the upcoming part of the series, we will definitely discuss in detail various different asset classes. So you would have heard an asset class called equity. But let me also tell you what an asset class actually is. An asset class is a concept where you store your money in that particular form. So when you say an asset class of equity, that means you save your money in the form of shares or mutual funds in equity. When an asset class is called debt, that means you save your money in the form of a fixed deposit or a debt mutual fund or any other debt product like bonds, etc., which you would have heard. When you hear of an asset class called gold, that means you keep some part of your investments in gold or related products like jewelry or even physical gold or even nowadays digital gold. And lastly, another very important asset class for most Indians is property or real estate, where you're storing your money, your savings in the form of a property or a real estate investment. So these are the things we will discuss. And on top of that, whatever questions you send to Dr. Gunjan, we will also be able to address them in a better context from now onwards. I hope you understood the basic idea that your money kept idle in a bank account is actually not doing you any service, although the amount will keep on increasing because you get some interest rate on it, but that is not enough to protect you from the basic inflation in the economy, which is actually eroding the value of your money, corroding the value of that money over a period of time. So if you are, because you are medical professionals, I wanted to give you this visual map that just like if you're going for a surgery and you will have different tools for doing different activities, in the same way, each asset class has a very specific utility and you have to understand that. It does not take a lot to understand it, to be very honest. You can actually understand the basics very easily. What takes effort is to understand what risk you are taking. And we'll be discussing about that also in the upcoming sessions. And it also is important to understand how to trust these different products, what happens in these products. So generally, when you're investing in a product like a fixed deposit, the returns are like this in a straight line, they keep going up. But sometimes in some of the other products, there is a bit of volatility. The returns keep moving up and down. So how do you orient your mind to understanding the different utilities and functionalities of these tools? Just like you have a toolkit of surgical tools available, this also is a financial toolkit available for anyone to take advantage of. So welcome to this financial toolbox. So we have very few basic tools in financial toolbox for savings. Some of these names will be very, very familiar to many people because we hear them very easily. One word is equity, which is related to equity markets, stock markets, everything. We'll talk about that in a little bit. We'll also talk about debt market. Then we also know which is real estate, everybody's favorite topic in India. And also another favorite topic in India is gold. So we'll talk about all these savings options, which most people in our close network or even known friends, family friends will have some or the other variety of these investments, and we would have talked about this with you. So it's something that you can easily understand. So let's start with the reason why we look at all these tools is that, okay, once the tools are available, but it's not like in your even in your surgical toolkit or doctor's toolkit, there are different tools that are available, right? And each tool will play its own role. So you have to carry the entire toolbox with you. You cannot suddenly say, oh, today I may not require this particular tool. I will keep it at home. You say, okay, I may not need stethoscope today. I'm going for a surgery, so I'll keep it at home. Yeah, it makes sense to keep it away, but doesn't mean the tool will be removed from your toolkit. So the whole idea of looking at these financial toolboxes is also maybe all of them are not relevant to you, but they will allow you to diversify across your savings needs when you look at all these tools from a individual perspective, and then you know where to place this. So you may not require this tool in your personal financial toolkit, but knowing that this tool exists, you can actually take advantage of it in some time in the future if you think that is a relevant tool for you to take advantage of. So one of the most important questions to ask before choosing any savings product that is out there, it can be a mutual fund or a stock or a property that you want to buy, or even keeping money in the bank in a fixed deposit or whatever, or putting money into gold. The most important question to ask is, when do I need the money? And this sometimes is not very obvious because not many people actually plan their finances strategically over a long period of time. They might know generally what their day-to-day expenses will be, or what their annual expenses will be, what their family's budget might be. They will be aware of some of those things. But to strategically plan, oh, how much money will I actually need for say if you have a kid and the kid is going to join a college a few years down the line, how much money I will need for education, how much money will I need for, say, the kid's wedding, or how much money do I need for my retirement savings, how much money do I need for my personal goals or ambitions, or spending, or some discretionary spending, like you want to buy a car, you want to buy a house, you want to go on some big vacation. So all these things, we know that these expenses exist in the future, but we don't know how much money do we need and when do we actually need it. So that is some amount of strategic planning is useful over here. I'm not saying everybody is capable of doing it from the get-go, but the moment you start looking at which asset class to choose, which savings product to choose, or which financial tool to choose, this question becomes very, very relevant, because you have to know a little bit of an idea as to how much money might be required. You don't need to know the exact figure, because nobody can plan everything to the exact decimal point accurate number. But it's sometimes useful to know generally, like, okay, you might be off by 10-20% for the final figure, but at least you should arrive at something close to that 80% number, which you might require in the future. And of course, because your goals might be spread out in time, some goals might be short term goals, like 1 to 5 years kind of a goal. And again, the short term, long term, they have different, these words have different meaning in terms of how the tax authorities look at it, because they have to tax you on a specific transaction that you have done. But in terms of your financial savings, short term, long term can mean very different things. I'll talk about that a little later as well. So if you have a shorter term need, you need a different kind of a financial product. And if you have a longer term need of that money, you don't need to get that money today or in the shorter term, then actually you have a different choice to make in terms of which product to choose. So keep this in mind when you look at all these options that I will walk you through. So think of all your investment decisions or even savings decisions as, when do I need the money? Is the money going to be required in a short amount of time for a specific spending? Or it's a vague spending somewhere in the future, which generally requires a lot of money, but you don't know the actual figure, or figure which is very close to the figure that you want to save. But it's there. It's going to be it's going to be a lot. It's going to be a lot of money in the long term, and you know that it's going to be, say, more than 5 years away. The reason I stress the time horizon point again and again is that when you look at something like an equity market or something like a property purchase for investment point of view, some of these investments are not obvious in terms of how much returns they will give in the long term. It might depend on a variety of conditions. So if you want to achieve a certain goal in the future, you may have to actually keep saving towards that goal, apart from just parking the money in some of these products. And that's the reason I stress the point that it might be important to just think of when you actually require the money. So we'll start with the asset class which has the longest of investment periods required. Again, this is one of the asset classes which has a long-term investment horizon, but this asset class is called equity. And when somebody hears of the word equity, obviously their mind races towards an image of Bombay Stock Exchange, where the stock ticker is there and stock prices keep rolling over and people are staring at that tower in all the newspaper photos that we have seen. So what is this animal called equity? And does our understanding of equity equate to the popular notions of what equity can stand for?